tryna take it down, place for you just scoring minds, press the bar.
And something very bullish and bearish just happened to the stock market. So I'm going to explain a very unique situation going on right now. We just hit more all-time highs today, but this is creating a very unique opportunity. So again, it's history in the making. We've already seen some craziness. 2020 has been wild. It is not stopping here, but I have more information on how we could ride the wave here and position ourselves. But I have that for you. Then we are going to talk about how we turn $30 into about $700 at the peak, and minimum $200 is what we're gonna walk away with in roughly about 30 minutes. And this was with Biogen. So if you guys watched the watch list last night, I did put this on there as one of those to watch. We got news happening a little bit earlier than expected. They had a lawsuit with Mylan, but I'm actually gonna start with this part to show you guys, because I have a very great way to show you the ghetto spread. And this was probably one of the best ghetto spreads we've ever done. Again, the ghetto spread invented by the Colt 2019. It is how to play for free. So we not only got to make that money in such a short time frame, we literally have zero risk on the table and $2,500 of upside off of a $30 investment. So I'm excited to share that with you guys. I have a little bit of the keys for you that we need to go over, and then a few of the plays we need to watch, but let's get right into it. Make sure you guys drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing. All of this was done live. Shout out everybody on stream. They hit it. They were, I know so many people on stream hit it because they went crazy after the next play we played for earnings, but we'll talk about that too. Qualcomm had a report. There's going to be a lot of continuations tomorrow, but we better see you on stream. I was sick. I'm sick right now. I said I got to get the watch list. I said, you know what? I got to flip this switch. I got to just give this here, 15, 20 minutes. That's it. Then I could go relax, go to bed. So make sure you keep up to date with the watch list, or just come on stream, baby. And don't forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, comments? If you made this play, any variations, anything, post it below. Let's source that information. Don't be too shy to say hi or too high to say shy. I appreciate every single one of you watching this video, liking the video, commenting. So thank you, baby. I love you, Chad. I really do. I really, really do. So let us not delay. I will get to the keys for you guys, but I want to talk about this play right here with Biogen. I really thought I should break it down with you guys in words and how it's going to work. So like I said, they won a lawsuit where the judge granted a victory in the case for Biogen with a patent with Mylan. And so they started shooting up, and it shot up and got halted. We alerted that there on the stream alerts. And then I was able to, what I did differently than most other times, I have a video. You guys should check it out. It's called How to Beat the Market Makers, or How I Beat the Market Makers. I did the same trick. Stocks go up with volatility. It's understanding that the option market is a separate market than stocks. So not all of these, it's going to be harder for everything to get centralized. And in these times of volatility, that news comes out, the stock was up 15, 20 bucks. And again, it closed up 50. It was even up almost $100 at one point, which is wild to think about. But then again, we've been seeing like Tesla and all that. But during this moment, the stock had a lot of volatility. It got halted, but you'll notice all the options go crazy. And what I noticed here, it was specifically with the February, not the 14th, but the 21st. So again, we got a decent amount of time, but here was the 400 call. And while it got halted, it had some orders come in at like 30 or 40, then it got halted. But I noticed that every single option was at like $5, $10, and this one didn't update as well as the 380. So I thought I would have more trouble with the 380, so I went straight for this, but I put in an order while the stock was halted. And that's usually different than what I do. Usually I wait to see to get a gauge on the prices, but since I posted this on the watch list yesterday, this is a key concept we talked about. If you see a good deal, you see a good opportunity, again, understanding this one had at least 2 weeks of time. Biogen goes crazy. Last time there was a move with Biogen related to any of these events, it shot up $100. Literally, the stock went up 50% last time there was anything good related to this, so you have to keep that in mind. But that's why I said, okay, I'll put it down there, $30 will scale in. I got filled instantly. So right when the stock came back up, I got filled. Then it just went up. And again, a lot of people, even then, even if you were 5-10 minutes late to the party, every single one of these contracts went crazy. So now this is what we did with the ghetto spread. So I bought this contract here, the 400 at 30. And as you see, at one point, it went for $700. Somebody actually bought this for $700, $593, $400 on the way down, and it even closed at 80 cents, which isn't bad, but again, surprising. But then again, you do see what happened with Biogen in that move. But it was an awesome, awesome play. It was cheap, and like I'm saying, even if you got in even at 10, there was an opportunity to flip, but you see how even getting in a little bit late there, If you hold too long, it could kill you. But now this is what we did with the ghetto spread to take advantage of this. So let's go back to the stock. You see what happens. Understand the story. This even has to do with implied volatility. IV is a result, not a cause. IV is a result, not a cause. IV is a result, not a cause. So what happened here, we grabbed one of the Biogen 400 calls for $30. So again, if you have stream alerts, this is how they come up. I'm trying to make it so you guys could understand the formation here, even if you're not stream alerts, because this will let you know what we're doing. Plus one, we didn't own one, so we bought one at $30. So we paid somebody $30 to agree to sell us 100 shares of Biogen at 400. The stock was at 320 at the time, 318. So that's why they agreed to do it. And again, even after we bought it, it jumped up to $60. But think about why they did it. The stock's at $320. We said, hey guys, if you give us till the next 3 weeks, we'll pay you $30 right now to sell us 100 shares of Biogen at $400. The stock's trading at 320. They're like, okay, sure, we'll take your money and let you buy the stock from us at 30% higher. That's okay with us. So that's why they did the deal. That's why we literally were able to pay $30 for this trade. But now, as the stock was going up here, again, this contract was at $7. If we bought it at $30 within 30 minutes here, so again, we got at like 11:28 or like 1:28, and then now by 2 o'clock, this thing's at 371. So now think about it. 30 minutes ago, we were about $70 away. Now we're only about $30 away. That increased the value of the contract. So now people were willing to pay $7 for that. So while it was up there, this is what we did with the ghetto spread. So as it went to 360, we sold one, because again, we own the 400. So we didn't own a 400 and we bought one, we plus one, but we don't own the 425. We still own the 400. We still are able now to sell it. So I shorted that. That's why it says -1. We came here to the 425. So again, you're seeing the timing here. As our option went up to $7, this option, the 425, it went up to like $3 at one point, and then we got filled at $250. So now as it went up to 360, we sold -1 Biogen 425 at $2.50. So we received, in the first instance, we paid someone to agree to give us that right. So now this time, as the options in the stock went up, we received $250. Got to redo that. To agree to sell somebody 100 shares of Biogen at 425. So we're able to make that deal, and we're allowed to sell that option because we have the right to the shares at 400, but we only paid $30. The difference was the stock moved, it shot up, it did all of this stuff. So now we were able to sell the right at a way further price for more than we paid for a way closer price. So we pretty much middlemanned it there, but now I collected $250 for that. And now here's one thing to keep in mind. The ghetto spread, this is what you could do if you don't have any day trades left on a small account. Because if you see, we bought one option, but then we sold a different option. So this isn't the same contract. You're not opening and closing the same stock. And now even by the end of the day, despite what happened with the stock and the price of these options, this option's worth $28 right now. The other one's down with 80. We're still holding both of these, and we still walk away with the profit, and we still have a max gain. But you could sell these without having to do a day trade. And this is the whole point of the ghetto spread. It allows you to hold the play, and it allows you to take profit while still having upside, and then now protect you from the downside. So what happened now by the end of this, after I closed out those trades, the net amount that we collected is $220. So we paid $30. That's our initial amount we spent. We sold that contract for $250. So it covers what we paid for that other one. We're walking away with $200 profit. So if both contracts expire, we walk away with no less than $220. If the stock goes to 425, we walk away with $2,500 and nothing more than that, because again, we sold the right. We agreed to sell someone the shares now at 425. So if it goes to like 450, anything 425 and above they get, but we keep the difference between 400 and 425. So that is the ghetto spread. We got paid $220 to take a $2,500 risk. But do you guys see how, again, it was catching the news? We were there right there. If you were on stream, you got your stream alerts. We made a play with it, but then as the play was working in our favor, this is what it allowed me now. I didn't have to do a day trade, but I finessed the contracts to now I have these contracts both till February 21st. Whatever happens with Biogen's going to happen. it could go up, but now we collected 1,000% just under the initial trade. I put 30 bucks in, got 220. That's $50 shy of 1,000% there. But now too, again, we could even, if I even decided to sell both the contracts with what they're worth, I could make a little more than that. But we still have upside. We still have time. We didn't use a day trade. We could perfectly swing it. And again, it's just a great risk to reward. So that is the ghetto spread. Hopefully you guys learned from this. This was a big play, but you could see how you could turn small amounts into large amounts, especially when it gets volatile, but get out of the play safely, still walk away with the profit, and still walk away with upside, baby. Invented by the cult, 2019. So that's pretty much it. Hopefully you guys learned from that. But now let's talk about what happened here. The Trump impeachment kind of boosted the market here a little bit. They acquitted him of everything, but now this is the big thing I want to tell you guys for. Watch for equal and opposite reactions moving forward with this market. We hit new all-time highs today, and I'll tell you, if nothing bigger than just more cases happens, if they're just saying more cases, the deaths don't break out of a crazy amount, it's surprisingly really bullish. And the reason is money has came into the global markets through China, even the US, and all these people getting ready to support it, and investors are liking that. But now old volatility is disappearing. This is going to do stuff. So again, we compared this to 2018, but now it's been, so much time since this volatility disappeared. This big volatility disappeared in October. As more time goes on, and then even this February, it's been over 1 or 2 years. The market in the Black-Scholes model, what's going to happen is it will allow certain algorithms and companies to take more risk because they're not perceiving volatility as high despite what just happened. Even then, even though this made us drop, this didn't create too much volatility. Again, you could see what the UVXY and VIX did. So the fact now that volatility is disappearing, but then you have countries all around the world deploying liquidity, this could be another bullish sign. And we've seen that every single time. Again, mixed with certain policies, when we've had these little drops and then these pops, it's been followed up by a lot regardless of what's happening. So why I'm saying this is because we will not see a move by February 10th if this continues. What we need is, again, equal and opposite reactions. You're going to need an event. If something big enough to stop this, upward force, it's going to be like a massive amount of spreading, a bigger sell-off, or even like a one-off news like Iran, that will be needed to, again, where you could literally look at the chart and be like, oh, this event happened, then it bounced, then today, then this. Is kind of what I talked about tomorrow, but we're getting a interesting mix here of we have news that's bad. Again, it's pretty much going to be, I think we're going to be watching oil in China. You just need that situation to deteriorate quickly, but with volatility disappearing, it could be a quick risk-on event, and even if China, and that's what I'm looking for, it might lead us to now we might need to be a little bit patient, maybe towards the end of February, but again, we do have the Fed in April. So in between now or again, even by the second week of February till April, we have to be on watch and keep our eyes out for this. So it's going to be very interesting. And again, however the first month or two of the year ends, that's usually going to be reflective of what the rest of the year is going to look like. So keep that in mind. But there's that. And again, how this week ends is still is still crucial. Keep your head on a swivel. I mean, use your deposits with what we're saying. You see a play going small, whether it's up or down. You see getting bullish plays or bearish plays. If you don't want, opportunity will hit when you least expect it. You don't just sit out there, wait for the best one, but put a small deposit down, put small plays, scale in, don't put the whole damn thing in, and get ready and be fluid, baby, just like water, currency. Somebody said that today. I love that. But this is the best time to start positioning, especially like I'm saying, it could either be massive bullishness from here, crazy risk on moment, but then random news, this coronavirus, what it's doing to the economy and everything else, that could also be a risk off event overnight. Again, there's a lot of black swanish type stuff. So we're at a crucial moment, but this is a good time to position. And now even for the long-term stocks, we dropped on the long-term stock. Snapchat got killed today. I even bought 50 more shares at 17, and then it kept dropping. I did say 1580 is where it could come down to. I was just getting impatient, but I think I might just buy more. But long-term, man, that's it, man. Don't be on the Snapchat squad if you're quick to sell. I mean, I'm ready to go, man. All the Jim Cramer people need to sell out after and then blame him, but strong like bull. I like Snapchat. But what I'm saying now is growth stocks are dropping. You're getting a 15% discount there. You're getting stocks, again, Spotify's, which are up. Those dropped 5%. AT&T kind of came back a little bit. You, again, throw up some of these daily charts, even IRM, any of the stocks we bought. ABIIB went up, and that's something interesting to talk about. But the fact is, dividend stocks were cheap a week ago. Now they're going up. Now growth is getting hit. You're getting actual movement. So despite the SPY being up, you have individual names at interesting spots, and they're offering discounts. So that's what I'm saying. Getting a leg in, it's a good time to position. It's literally how we positioned ourselves at that. Remember when October, when we first made the portfolio, markets were going up. They started to rip. We took advantage of different names. So just keep that in mind. Ride the waves here, but don't be too intimidated by it. Be careful to cling to an idea, intuition, or anything, because there's a lot that could drive the market up or down violently, and it's not going to have to make sense. They doesn't need your approval for that to happen. So that's pretty much it. So let us get into the plays. The only play we actually made today was that Biogen. It was a 1-for-1, and we did good. There was actually the earnings play on Qualcomm. And again, Qualcomm had a very similar situation to even like Google. And again, it looks like this earnings has been Iron Condor season. But I grabbed the February 21st 77.5 puts. I grabbed 10 of these at 14 cents. And I didn't get a call, and this was just the logic of Qualcomm. They shot up 2% today, and the option premiums were very, very high. So it was just like Google, where the options were high on the call side, the puts were cheaper. Same thing even we saw at Disney's. That's why I was like, I could even try to find a way to play it both ways, but it wasn't really worth it to me. Again, even $100 call was like $80. Even if you went 1 week earlier, it didn't even make it any cheaper. And that would have been like a 10% move just to break even. Again, Qualcomm doesn't really move like that. Even though we've hit it the last few times with earnings, that's because, we even, imagine we scooped it at the low. We got to catch the run up. So we were already up almost, 10-20% before it reported. But here, it already had such a run-up because these last few days, it just really wasn't there. And then they ended up dropping. They had some issues with Corona and how that's going to affect their guidance and inventories and all that. So they're going to be a good continuation play, but that's the only other plays we made today. But with them, with Snapchat, even though we bought those shares and then it ended up dropping, I'm going to probably look to get some more of these. I'm even considering, even more ABIIB. I did make a double deposit on the account. I was like, all right, I like these discounts. I want to buy some more long-term, even the dividends. But all of these companies, I even said earlier with Snapchat, kind of look like XLNX. Watch out for these earning continuation moves. Like we said, it's when these plays keep continuing. They make the first move on earnings, and then they go from there. So watch out for them. Watch Google. Our play is still actually good. They went up a little bit more than yesterday, but still around $200 profit on both of those. So tomorrow is going to be a crucial day. If it stays within the Iron Condor range, and then again, it could always go up a few bucks, and then if it falls back in there, that's going to be good. But the weeklies are going to be more vulnerable tomorrow. That other February 14th one is actually looking pretty decent. Then watching NVIDIA, we had those plays. They went up a little bit, but you'll notice something. Those 290s, the market it's telling you something. They went up a lot in the morning when NVIDIA went up. But remember, we got the February 14th 290s, but you'll notice something. We fell victim to the same trick. Same trick that was able to help us, that you see how even though the stock went up, these contracts went down, but these other contracts, they at least saw a bigger gain closer to the money. So this is telling you, even though NVIDIA went up, people were expecting a lot, but now with these prices going down, they're saying at this pace, they're not expecting it to hit 290. So keep that in mind. But if NVIDIA turns around, that is going to be a big play. So I really, really like that one. Again, we had that old position scaling into the earnings. That one's still down 15%. But that play is February 21st. So we have a little bit more time. So you can see how the ones with more time held a little value. So watch them. Watch Disney again, continuation. Same thing with Snapchat. Disney, not as much. However, this is a crucial level for them. This 140, again, anytime they broke below it, it's gotten bad. And right here, you could even see this was like one of those big levels. 140 is what they had to break to get that big run up. So watch where they're at here. Look at the volume. I think Disney could start to get bigger. And even though the earnings wasn't a big move, I think that continuation play will be bigger. Then Starbucks, a few people sold out. Pershing Square exited. That's Bill Ackman's fund. They announced that they're exiting. However, they also have ex-dividend here. So we saw what happened with ABIIB a few days later. You saw what happened with TLT. Keep that in mind. Then watch Biogen, and I think that's pretty much it, except for all the other dividend stocks. I'm going to be watching ABIIB. You can watch Boeing, too. They had that report of a plane overshooting the runway, and again, you're seeing how sometimes that negative events happen. It'll be good, if it's not that negative, it'll be a catalyst to dry it up. Again, even with Tesla, you have people who short it and have to cover. There's these back and forth events, so keep that in mind. Tesla was crazy, but I'm going to be keeping my eyes peeled. There's a lot of things and many things that could happen, so I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure we see you there in the morning. Make sure you post your watch list and make sure your head is in the game, baby. We need endurance. We need opportunity. And I need you to take advantages of deposits. You can't hesitate. You can't be timid. The best thing to do that can make up for any weaknesses is control the budget. Go small. Be fluid, be ready to move. Don't get too caught up in what's the right idea or this. Does it make sense from a budget perspective? Can you do 10 of these with $10? Be smart, ghetto spread, get your money back, make it free, and be positive and respectful. And don't forget to stand up for everybody, baby. It's the cult. Let's go.